Hello, I'm Kamal Santamaria. This is Counting the Cost on Al Jazeera, our weekly look at the world of business and finance. This week, Haiti, 1 year after the quake. And it's the same old story. A major disaster, promises of money from the rest of the world, but where is it? Also, Portugal avoids an international bailout, but for how long can the European Central Bank keep buying time for the Eurozone? And we explore what was really behind the crash on Bangladesh's stock markets, a crash that produced scenes like this. All that to come, plus an interview with Spain's Deputy Foreign Minister on the country's still precarious economic state. But we begin in Haiti, a year this week since the magnitude 7 earthquake devastated parts of the country, killed close to 250,000 people and left around 1 million homeless. They shouldn't still be homeless now in early 2011, but the vast majority are, and any long-term reconstruction has yet to begin. So what has gone wrong, given the generosity shown by so many countries in the wake of the quake? Here are the numbers. $11.5 billion was how much President René Préval asked for to rebuild his shattered country. A UN donor conference in March of 2010 raised more than $2 billion for recovery work, and by year's end, $1.28 billion was actually sent to Haiti, around 60% of the figure pledged. Now, there are two things to consider here. One, donor countries haven't come good on their promises, and that's not something new, unfortunately. But two, and this is what the aid organisation Oxfam is saying, the Haitian government has demonstrated a lot of indecision, which left its people without a roof over their heads. Rob Reynolds has this report.
Peddler Jean-Claude Saint-Pure makes his living on the streets of Port-au-Prince. Ask him where the money meant to rebuild Haiti has gone, and his answer is blunt.
Look, there are still bodies under this rubble. With all that money, they could at least get them out. What have they done with the money? I think they've done nothing.
Countries around the world have pledged $4 billion for Haiti. Less than 30% of that has been spent. Many countries have not yet handed over money promised at a donors conference in March.
Well, I think donors have been generous, but until the appeal is 100% funded, there's still room for improvement.
Private charities have done little better. People gave $1.4 billion to American charities for Haiti relief, but those organizations have so far spent only $530 million. That's just 38% of the total.
Hundreds of thousands of Haitians who are still in these pretty squalid tents, and they're pretty aware of how much money has been raised on their behalf, so there is a great deal of frustration and a sense of what's happening with that money. But I would say that it is important to not spend that money too quickly and to plan and to coordinate with the government and with other NGOs, and that does take time.
Some way to involve more people even than we planned.
Much of the money pledged to the fund set up under UN Special Envoy Bill Clinton, $368 million, has gone to the Haitian government in the form of loans, grants, and budgetary support. But almost all Haitians interviewed deeply distrust the government and its handling of the money. Teluk Souffrant spends his days in the hot sun, making cement building blocks by hand. He gets 20 cents for each one. The woman paying him to rebuild her house is poor and often doesn't have enough money to pay. He thinks he knows where the funds meant to resurrect his country went.
The government was supposed to have spent that money getting us jobs, but so far we've seen nothing.
Well, joining us now from Port-au-Prince is Julie Schindel. She is from the aid agency Oxfam we mentioned earlier. And I wonder, Julie, do you think 1 year on that you would be looking at what you're looking at now, millions of people still living in tents and no major reconstruction?
You know, when I came here last March, I didn't know what to expect. I had never been to this country before, and I think that I saw the level of devastation, but what was more obvious to me was the terrible poverty here before the quake. 1 year on, I think I didn't expect reconstruction to be done in any way, but I would have certainly hoped to have seen more progress. I think the scale of 1 million people still living under tents and turbulence is tremendous. And I and Oxfam as well, all of us would have hoped to have seen more progress in the first steps. It's not necessarily about being complete with the process, but at least having started it.
So where's it gone wrong, do you think, Julie? Because in these sorts of situations, we nearly always look at the donor countries and say they haven't come through with the money. I suspect it's not as simple as that. What do you reckon?
That is definitely a part of the issue. I think when we look at reconstruction, we have to remember that this is like the second phase of responding to the Haiti earthquake. The first phase is the emergency response, when you have all of that emergency medical care, water, sanitation, food that comes in. We're very, very good at doing that. We saved millions of lives together in the aid community right after the earthquake. Now, when you're on the reconstruction phase, is a much harder task, and the actors that are really needed to achieve or at least start reconstruction include actors like the government, actors like big donors from foreign countries, and this takes a lot of coordination, and it's a lot of big balls to get rolling, so to speak. The government especially is historically weak. Now, in a bit of a crisis, not knowing who the next leaders of Haiti will be, and so leadership and real big-term, strategic, long-term thinking is very hard to do at this time. Ultimately, that is what is needed, though, to get reconstruction going.
Is there also possibly a dangerous knock-on effect here that people, and by people I mean the donor countries, they're going to look at this and say, well, why should we throw more good money after what we've already thrown? If it's not having an impact, it's not making a difference, we've got our own economic crises to worry about. Thank you very much.
Well, that's an excellent point, and I think you're hitting on some issues that we are very concerned about here for the future, for 2011, particularly this year, which is really sort of the key turn year when we're going to say, all right, are we going to get going here? Not only economic crises at home that make donors much more hesitant or careful when they give big bucks to a somewhat unproven government, but also the other element, which is if we say, well, things are bad here in Haiti and historically weak government, and now we don't know who the next leaders will be because of this political situation where the results of the elections of last November 28th are disputed, and we don't know who or when that next president will come into this country. Donors may start to feel hesitant, and that is a big problem because their big bucks are very, very important for the large-scale, long-term reconstruction programs. So if we say all hope is lost and we can't change the system here in Haiti, we run a serious risk that we would actually fulfill our own prophecy. And so I think what is needed at this time is to look very honestly at the situation here and say, in all reality, no, not a lot of progress has been made, but it is not too late. And here are the key things that these various actors need to do, including big donors, including the government, including foreign aid agencies like Oxfam.
Julie Schindel joining us there from Oxfam in Haiti. Thank you so much for your time. And still to come on Counting the Cost, we hit the road and head to Motor City. Detroit's auto show is in full swing and everyone's talking electric. That is a little later in the show. But let's move to Europe now because there is always something economic happening there, and our focus is on the Iberian Peninsula. First, Portugal, which has been under pressure to accept an international bailout, much like Greece and Ireland did. But Portugal showed a bit of fortitude this week when it raised $1.6 billion in a bond auction. Trouble was, it was really the European Central Bank which came to Lisbon's rescue. It bought up debt before the sale, bringing down prohibitive interest payments. So the problems still exist. Portugal's got a deficit of 7.3% of GDP right now. It's trying to cut that to 4.6% during the year, which is still well above the EU limit, I must say. That could be difficult because the economy is on track to contract by at least 1.3%. And unless the Eurozone comes up with a concrete plan to contain the crisis of confidence, Portugal may just stumble as it attempts to raise billions more. Alan Fisher's been in Lisbon looking at where Portugal goes to from here.
In troubled times, the smallest lift seems like a victory. Portugal went to the markets to sell off part of its debt and did okay. Not a punishing 7% plus interest charge, a more manageable 6.7%.
We are doing our work, and the markets knows that very perfectly.
But many predict the down's coming, an almost certain bailout by the European Union and the International Monetary Fund.
Our debt burden will double every 7 years if we compound the interest rate. So for a country that is growing about 1.3% over the last 15 years and is not creating any wealth, it is very difficult for us to be paying a huge debt.
The Portuguese government says it doesn't want any outside financial help, doesn't need any outside financial help, and by raising money in the markets, it would seem to suggest that that's true. But everyone remembers the exact same thing being said by Ireland and Greece just before both countries received a bailout. The signs of discontent are everywhere. These are train drivers on strike because of wage cuts. Despite the warm winter sun, there's little reason to smile. In the past few months, sales tax has gone up. The central bank predicts a contracting economy in the next year. Jobs are harder to get and will be harder to keep.
It's hard at work. I've had a job for 15 years, but it doesn't seem like there's a job for life anymore. Things are very, very difficult.
I can feel the difficulties starting to affect my life. The main issues are salary cuts, the cost of living on the rise, and welfare going down.
The worry always was Portugal would need a bailout like Ireland and Greece, dragging down the euro, putting Spain at risk. It was called contagion. The virus may not yet have claimed a victim in Portugal, but the patient is far from well.
Nor is the patient in the bed next door, Spain. It is actually a very similar story, an economy in trouble, under pressure to go to a bailout, but still managing a successful bond auction, $3.9 billion worth to be exact. And as it happens, the result of that auction came through just as I was sitting down for a chat here in Doha with Spain's Deputy Foreign Minister, Juan Antonio Yáñez Barnuevo. Minister, thank you for your time. Let's deal with the Spanish bond auction. You must be very relieved that this seems to have gone so well because Spain's been under a lot of economic pressure for a long time.
Well, at the same time, it's not a big surprise because all recent auctions have gone very well. So it only proves that Spain is a solvent country, it's a solid country, and there is a lot of confidence in us around the world, more than sometimes one can read in the press.
So do you think then that countries like Spain have been unfairly singled out? Because this is where it starts. It goes Greece, Ireland, Portugal, Spain, it might be Belgium next.
It's very curious that, for instance, the level of public external debt of Spain is lower than that of Germany. This is just one piece of data. But certainly we need to do a lot of things. We are doing a lot of things, such as cutting deficit, fiscal consolidation, budgetary cuts, also structural reforms such as labor market, privatization, etc. And this is going on, and the government is very determined with the support of Parliament. And we need, as we proceed with those reforms, to have full solidarity from European partners, and we are getting it.
Let me ask you about your position in the foreign ministry, dealing with, obviously, other countries. Have you noticed any difference? Has it been difficult to attract interest in Spain because of the negative press about the economy?
I can assure you that we have a lot of backing and a lot of interest from countries and international organizations. Very recently, we received in Madrid the first Deputy Prime Minister of China, who has been touring Europe. And certainly it was interesting to see that from the Chinese side was more positive attitude, not just relating to Spain, but also relating to Europe. They seem to sometimes to believe more in Europe than some of the Europeans.
Right, I'm glad you mentioned China, because I was going to ask you about that anyway. China has been so open about the fact that it's interested in investing and in buying up Spanish debt. Are you happy with that, though? Are you happy with that level of interest and influence from China?
No, we have the best of relations with China, and we wish to have even greater opportunities and relations with China at all levels. Not only Spain, but the whole of Europe is interested in China.
All right, let me ask you about relations with another country, your closest neighbour, Portugal. I said it before, there are fears about Portugal's debt problems and it needing a bailout. Do you worry about the contagion as it's become known?
But you know, everybody talks about that, but only yesterday there was also an auction of Portuguese bonds and it went all right. So I think there is sometimes too much noise around, and then the realities do not bear out about all these things. But we certainly support Portugal and are very interested in the solidity of Portugal, and we hope that this will be like that for the near future.
Okay, final thought from you then. What do you say to all your detractors? Anyone who, it might be the EU or the IMF or any other country or group, who has doubts in Spain, because you seem to be saying that things aren't as bad as we all think or are all led to believe. What do you say to people who think that you're the next Greece or the next Ireland?
No, nobody's saying that, I can assure you. Look, we are going through a difficult period economically. We don't deny that. But Spain is solid, is solvent, is taking the necessary measures, and will get through with the help of our partners in the European Union and other partners around the world. And we are getting it. And we are sure that this year, 2011, will be decisive in surmounting this downturn.
Now to a stock market crash, riots and an inquiry. We're talking Bangladesh, where the rising middle class is finding out that investing isn't a one-way bet. It all started with an overblown stock market in 2010. The market actually soared 80%. It did so through more than 3 million small and individual investors, up from the just 500,000 or so back in 2006. Then the bottom fell out. Since December 5, the markets in Bangladesh lost almost a third of their value. In the first trading week of January 2011, Dhaka alone had $9 billion wiped out, $4 billion in one day. And to put that into context, the market's only worth $45 billion. In a moment, we'll get to the bottom of the falls and subsequent rises, I might add. But first, we're going to catch up with one small investor. Nicholas Huck has his story.
The neighborhood of Mir Hazirbagh is home to the city's welders and mechanics. Sikandar Ali was one of them. 2 years ago, he swapped his tools for a shirt, borrowed money, and invested his life savings in the market. He was doing okay until the market tumbled. He lost $10,000, half of his family's savings.
I still don't understand how this happened. I thought that financial authorities would see this coming and protect us.
Living in a small two-bedroom flat, the family of 6 are now struggling. But despite his losses, he's still investing. Every day he goes to the trading floor to check his shares. Over the past year, more than 200 brokerage houses like this one have opened up in neighborhoods across the city. This has attracted new investors to the market. Just in the last 6 months, 700,000 people have tapped into their savings to invest in shares. Many of them sit here all day trading stocks.
Most of us follow the big players. If the big investment banks put money in a company, then we do the same.
The Prime Minister's office has opened an inquiry into why the market has been so volatile. Already, heads have rolled. The deputy chief of the Securities and Exchange Commission resigned. The government is trying to reassure investors to keep the market going. And it seems to be working. Sikandar Ali has taken another loan to buy even more shares.
Mushtaq Khan is a professor of economics at the School of Oriental and African Studies, and he joins us from our London studio now. Professor Khan, what on earth happened for there to be such fluctuation over just a couple of days in Bangladesh?
Well, two things happened. One was a much longer term problem, and one was an immediate problem of regulation and management. The longer term problem is actually much more important for Bangladesh to solve, and that's that since about 2007 to 8, since the emergency, investments in the real economy have been quite depressed. And the real economy is driven in Bangladesh by small and medium enterprises, the garments and textile industry, which has achieved a dominant position in the world now, by the electronics industry, by the shipbuilding industry, by the domestic market in food manufacturing and poultry farms. These are all small manufacturing and medium manufacturing enterprises, and investment there has been depressed. As a result, investors and banks have put money in the last couple of years into the stock market, which actually attracts investments for a small number of about 100 big companies in Bangladesh, which are very heavily capitalized, and they don't really drive growth in Bangladesh. So what has happened over the last year or two is that stock market prices have gone up because savings of small investors and of banks have piled into the stock market with a small number of big companies, and the result has been an asset bubble of gigantic proportions. In 2010, the stock market doubled in value, and this was clearly unsustainable. And the government, in the long run sense, was sleeping, because what they should have looked at is this combination of a depressed real investment in the real drivers of growth in Bangladesh combined with an asset bubble was unsustainable. They woke up very late. And
so what went wrong in the sense of regulation? Because if banks are pumping money into the markets, that is going to artificially inflate it, and that surely needed to have been better regulated.
Absolutely. And here there was a kind of maybe ignorance, but also the big players in Bangladesh, the big companies which were trying to raise money in the stock market, they had a vested interest in keeping the market going up and up because they were raising money in the market. And as a result, there are suspicions that balance sheet was not looked at very carefully when these big companies were raising money. A lot of paper was issued without adequate backing, that banks were allowed to pump money into the stock market because it suited various interests. But there could also have been simply the government caught off guard. The problem was that when they began to respond around about November and December last year, partly as a result of an IMF mission which pointed out that banks were overexposed in the stock market, another set of regulatory failures happened because the government, trying to achieve a soft landing, kept on changing the rules regularly overnight in terms of margin requirements, in terms of how much money banks could have in the stock market. As a result of that, there are allegations, and some of them are quite serious, that insider information was used by various people to dump stocks or to buy stocks at the right time. And in a context like Bangladesh, where politics is very deeply involved in institutions and personal connections matter a lot, the regulatory failure is that who knew at what time when margin requirements were going to be changed, when banks were going to be asked to withdraw money. And a lot of money was made out of the crisis itself, which has really angered a lot of small investors who think that they were left in the lurch.
Professor Mushtaq Khan talking Bangladesh with us on Counting the Cost. Thank you for your time. Now, Detroit is making a comeback after all the dramas the motor industry went through in the United States. And there's no doubt Ford is leading the charge. It's now toppled Toyota as the #2 automaker in 2010. In fact, the US auto industry as a whole snapped 4 years of falling sales last year and also started to change direction: electric cars. We turned to Tom Ackerman to tell that story. Here he is from the Detroit Motor Show.
As much as the focus here at the North American International Auto Show is on alternative fuel vehicles like GM's new Chevrolet Volt, even the greenest cars here ultimately still depend on fossil fuels. After all, their batteries are charged in nearly all cases by electricity from coal and natural gas generated plants. Nevertheless, the industry is fiercely marketing them for their positive impact on the environment, their fuel efficiency, and their thriftiness. Ford has unveiled its first all-electric passenger vehicle, the Focus. No price tag yet, but Ford is highlighting the savings that can be gained by recharging this car in your home garage in just over 3 hours, or leaving it at public charging stations, still scarce on the ground in America, which you can locate on your smartphone. Toyota, a pioneer in the U.S. hybrid car market, is trying to keep an edge on its competitors by offering an expanded line of Priuses. This plug-in hybrid uses petrol as a backup, but for short commutes, Toyota says it could save you from ever having to tank up. The big U.S. car makers are investing billions on technology to restore Detroit's tarnished standing. But they and their international competitors are facing a daunting challenge: how to bring down the expense of the lithium-ion battery. The battery is still a major factor in keeping electric hybrids out of the financial reach of the mass consumer market. And here's something you rarely see at an auto show: a crash-tested wreck. It's Volvo's way of leveraging its reputation for safety to assure consumers that its electric vehicle of the future will not neglect that kind of feature. For Counting the Cost, Tom Ackerman, Al Jazeera at the North American Auto Show in Detroit.
And that's about it. Don't forget to get in touch with us at AJ Counting Cost is where you'll find us on Twitter. We post what's coming up on the show there, plus businessy tidbits which we collate from the online world. And of course, our main page is at aljazeera.net/English. You click the business tab at the top, you follow the links to the Counting the Cost page. Blogs and previous episodes of the show go up there. But that is it for this edition of Counting the Cost. I'm Kamal Santamaria from the whole team. Thanks for joining us. The news on Al Jazeera is next.